Welcome to day 14, ladies and gents. We are approaching the end of trading camp. We only have one more day after this, and it's been an exciting journey. It's been based off of all of the feedback and in the comments. You guys have been absolutely loving this, and I've been loving it too. It took a lot out of me to upload for 15 days straight on YouTube every single day, right? Now, of course, today, like I mentioned yesterday when we spoke about day 13, today we're going to be diving into our trading plan, right? So, based off of all of the stuff that we learned throughout this whole trading camp, we must have a trading plan going into the markets, right? If we approach the markets without having a trading plan, then off the rip, we're doomed, right? Anything you approach in life without a plan, you're pretty much almost doomed from the get-go, right? So today I'm going to be going over my personalized trading plan strictly for the trading camp members. So if you stuck around for this long, if you made it to day 14, pat yourself on the back, because now, like I said, I'm giving you guys a personalized trading plan that I came up with so that you guys can approach the markets and go ahead and kill it, right? So the very first thing that we want to talk about, and this goes hand in hand with knowing thyself. You want to establish your trading identity. So who are you? What type of trader are you? Are you one that can't hold trades for a long time, so you scalp? You're one of those people that you intraday trade because you're busy throughout the day and you don't really have time to scalp? Or are you a swing trader that looks to hold on positions because you're not looking to look at the market every single day? Every single day you're looking to, invest in a position and then hold on for a week or two or multiple weeks, so forth and so on, right? So of course we have scalper, like I said, that's 1 to 30 minutes, almost to an hour trades. Intraday, anything from an hour to a few hours, and then swing trader multiple days plus, right? Now, the next thing that you want to focus on, you want to focus on the assets that you are trading. Are you trading Forex pairs? Are you trading indices? Are you trading futures? Are you trading crypto? Whatever the case may be, you need to figure out which one of these are for you. Now, me personally, y'all know I like to trade gold and I like to trade US 30 and NASDAQ, right? So I didn't even put gold on here, but let's put this slash metals. Oops. Slash metals, right? So when you understand what it is that you are trading, now you can come up with that plan of, okay, like, what are my main pairs? Y'all can see to the right here, I have majority of my main pairs. Y'all know my main pairs goes gold, NAS, US 30. Everything else here is just pairs that I look at from time to time just to get an overall direction of the US dollar. And then, of course, we got like Bitcoin, and then got the government bond yields just to look at overall price, and then the VIX, which is the fear inside of the market, and then the DXY, of course, to look at the overall dollar, right? So you want to understand, like, okay, what pairs are you going to focus on? I suggest that y'all have like y'all top 3, top 4. Anything more than that, y'all really don't need for a while. Like, when gold is golden and it's like in a trend, I only trade gold. But when gold starts to like consolidate and do like any weird stuff, then I'll go ahead and trade like US 30 and NAS, because I don't like to deal with gold inside this consolidation. So that's why I said you want to have like those couple pairs, 2 to 3 or 4 pairs. That way, when your main pair is a little off, is consolidating, so forth and so on, then you can jump to another pair and you don't have to trade inside of that consolidation. So that's the very first most important thing, is identifying who you are as a trader, right? So we've been talking about that throughout this whole boot camp, understanding thyself, what causes you to become emotional, what causes you to be fearful, so forth and so on, and really understanding who it is that you are, right? Now, moving on to our next thing, we want to talk about our risk management. So this is one of the most important things, so I'm going to dive a little bit into this, right? So when we think about risk management, you want to set a tone or set a rule, because as a trader, you must have a set of rules. The moment that you do not have a set of rules is the moment that you fall victim to acts of randomness, right? So if you do not have inside of your trading plan that you're going to risk a maximum of 5% on your account, then one day you might risk 3%, and then the next day you might be feeling froggy and risk 20%, right? So you want to make sure that you have those rules in place. I suggest that on any particular trade, you do not risk more than 5% of your account balance. I would say that's the max. Of course, if you're doing something like a build account, or you're doing a challenge and stuff, then you can up it a little bit. But like for your main account that you're like maintaining, I wouldn't risk no more than 5%. But you're doing like a challenge, then you can up that to 10%. Now, one thing I want you to understand as well, risk is also dependent on your level of skill, right? So if you're a beginner and you're just now starting to come around with consistent profits, then yeah, you want to stick at that lower threshold, 3 to 5%. But if you got some skill, you've been seeing consistent returns, you've been able to build accounts, you've been able to scale accounts, so forth and so on, you can up that risk because one, you have a high level of confidence, and two, you have the skill. Because of course, the person that is not skillful, they can't risk 5% or 10% on one particular trade because they're just not skillful. But when you have the skill and you know that, okay, I'm not going to potentially lose, 5 trades in a row based off of my skill level, then you can be open to risking at 10%, so forth and so on. It just all depends on you as the trader, right? Now, moving on to the next thing, our max loss per day, right? So if our max risk per trade is 5%, then you want to keep that max loss per day around that same median, right? Like you don't want to go and say you can lose 25% in one day. Like that's outrageous, right? So you want to have your max loss limit, I would say 10% max, right? If you think about 10% on each day, you have to lose 10 straight days to lose your whole account. But that's at the high, like that's at the maximum. If you are risking like 1 to 2% on one particular trade, then your max loss limit per day might be 5%. And if y'all had like trade like funded accounts and so forth and so on, like y'all max loss limit might be 10% for the whole account. So then like you will have to adjust that accordingly. So if you have a, like I said, 10% maximum drawdown limit, then should only be open to like risking or max risk per day or loss per day at like 2%. That way you still keep yourself in the game, so forth and so on. And then moving on to this next thing, this is super, super, super important. Max number of trades per day. Anytime I see somebody that's like failing in trading, or they blow accounts, so forth and so on, and I say like, let me see your trade history, they take like freaking 10, 12, 15, 20 trades in a day, and it's like, that's why you inconsistently not profitable, because you taking so many damn trades. You got to think about it in the terms of this: the moment that you take a trade, that is a moment that you put yourself at risk, right? So more opportunities to put yourself at risk means that more opportunity you have to lose the money that you have in your account. So you want to set a threshold. Me personally, I only like to take like 3 to 4 trades a week. So I might take one trade in one day and then 2 trades in the next day. Because sometimes, of course, like you might get stopped out and then you re-enter, so forth and so on. But like for the whole day, I don't like to take more than 2 trades. And that's just me personally, because if it take me more than 2 opportunities to be right, then it's more than likely I'm wrong, right? So you want to set that threshold for you. Of course, I am an intraday trader, so I'm not a scalper. Scalpers, you might have a little bit higher trades per day because you're scalping. You're looking to catch those, 15, 20, 30 pips, so forth and so on, and be out the market. Me, anytime I take a trade that's intraday, I'm bagging anywhere from 75 to 150 pips on gold easily, because that's like the daily average range. And then on like indices, anywhere from 100 points to 200 points, because they fluctuate a little bit more, so forth and so on. So a part of being a trader is having those rules set for you and set in stone. So think about it like your job. When you go to work, you have rules that you have to follow at your job. As a full-time trader, you have to have rules set in stone because you have to treat it like a full-time job. So you have to have those limits and those thresholds in place in order for you to not fall victim to randomness, so forth and so on, right? So forth and so on, right? Now, one second. I'm losing my voice here. Moving on to our stop loss strategy. Your stop loss strategy, this goes hand in hand with our risk management. So you're either going to have a fixed percentage based. So like if you saying like, okay, my stop loss is based off of me risking 5%. Okay, cool. That's your stop loss. Or you can base it off of structure points. Me personally, I like to base it off of structure points in addition to percentages, right? So I base my stop loss, like my actual stop loss placement. So like let's just say if I have this long gap or short position, and if I have structure that's like this and I enter a trade here, I'm going to have my stop loss beneath this last higher low point. So I know that my stop loss, if it gets violated, that I'm wrong about the trade, right? So in addition to that, then I will equate my lot size based off of that stop loss. So in this case, let's just say 36 pips, right? Even though this is 361, let's just say 36 for math purposes. So 30 pips, 36 pips stop loss, and I will base that off of the, or I will equate that to the amount of percentage I want to risk. So if I want to risk 5%, then I'm going to take my 36 pip stop loss and look at my account balance and say, okay, how much is 5% that's going to risk 36 pips on this overall trade, right? So that goes hand in hand, like I said, with your stop loss strategy, basing off of structure points, or you could base it off of, just a fixed percent stop loss, right? And that goes hand in hand with your position sizing, right? So you either want to base your lot sizes based off of how much you want to risk. So like if you say I'm going to risk $1,000 to make 3,000, then you can base your lot size based off of your stop loss size. So in this case, 36 pips. Let's just say I want to risk 36 pips, but I want to risk $3,600, right? That will be using what, a 10 lot and 36 pips, $3,600 to make, let's say, 100 pips, and then that will get us $10,000, right? So that is with a fixed dollar amount, or you can do it based off of percentage of your total capital. So if you got $100,000 in the account, and then you want to base your lot size off of risking, let's say, $1,000, which is 1%. You can use that 1% and equate it to choosing your lot size, right? And then, like I said, of course, risk to reward based, risking $1,000 to make $3,000, so forth and so on, right? Now, all of this is, of course, like basics in trading. So if you don't even have like your position, understand your positions, that's the very first thing that you need to do before you even get trading. Like you need to know how to adjust your stop loss, how to calculate your stop loss, how to properly position size, so forth and so on before you place any trades. Like traders mess up because they don't even know how much they risking. They haven't accepted the risk. They haven't dove deep into understanding like what's really at risk, and also what can be potentially gained, so forth and so on, right? Now, moving on to our trade setup and execution. This is one of those things where you check off all the boxes to build confluence, right? So in this case, is the market trending up? Are we in an uptrend? Is the market trending down? Are we in a downtrend? Is price consolidating, right? And is there high volume and high volatility inside of the market? Like the current conditions right now in these Trump markets, it's like a lot of high volume. You can literally see NASDAQ drop 632 points today. US 30 dropped 881 points today. That's a high volume market. So when you checking off these boxes for your market conditions, you want to understand like, okay, the market is trading very high volume or volatility right now. So I'm going to have to adjust my stop losses and my take profits accordingly, because normal conditions, US 30 not going to drop 800 points in one day. It might drop 100 or 200 points, but not 800. So understanding, is the market in a high volume or high volatile market, then you can pretty much adjust your stop losses, your take profits, your lot sizes, so forth and so on accordingly, right? Then going to our entry triggers. Of course, we didn't dive super in depth into overall entries. That is something I talk about, like I said, in my Blueprint Trading Academy, but I do tell y'all that I take strictly breaks and retests, and I'm looking for like engulfing candles. That's the bread and butter of it, but of course, it's a little bit more detailed that we haven't talked about inside of this trading camp, right? So, what are your entry triggers? Breaks and retests. Did you get a rejection of a key level? Did you get a candlestick variation? So forth and so on. And you want to check those boxes off before you look to enter any trade, right? And then you want to ask yourself, what is your max number of entries? So, if you heard of the term twin trading, like you can enter one position and you can, for twin trading, you can enter multiple positions, right? So you want to ask yourself, how many entries am I going to have on any particular position? I would say the max y'all should do is like 3. That way y'all can close y'all positions in thirds, TP1, TP2, TP3, so forth and so on. But there are people that literally like do like 20 entries, so forth and so on, and people do 1 entry. Me personally, I like to split mine up into 2 or 3 entries. That way I can split up the lot size, save some of the margin, so forth and so on, right? Now, one of the most important things, of course, your entry. So knowing where to get in, and then also knowing where to get the frick out. So your exit strategy, is your exit strategy going to be based off of, okay, I made a 3-to-1 risk to reward ratio? Did I get a percentage target? So if I got a 3-to-1 risk to reward ratio and I'm risking 2%, then that means I made 6%. So am I going to get out automatically when I hit that goal? Or am I going to get out by having a trailing stop? Or am I going to get out by a structure level? Or am I going to get out with other being like a Fibonacci level, so forth and so on? And really understanding that. So me, I get out at structure levels and I get out at Fibonacci levels. Those are only 2 that I'm really looking at, right? And then of course, once I get to those levels, I like to trail my stops, so forth and so on. I don't really do the percentage based fixed profit targets. I like to just solely focus on where is the market going based off of my fibs, or where is the next stopping point based off of structure, right? Now, moving into our pre-market routine, our post-market routine. This is super, super important, right? So you want to be able to review your news for your pre-market routine. You want to see what news is ahead before you place any trades. Because if you get in the trade at 8:15 and then you got news at 8:30 and you didn't know about it, as soon as that 15-minute candle print, the market just shoot up and hit your stop loss. That's something that could have been avoided if you would have just checked for news. So you want to be able to be aware for all of those things, right? And then this is something that I do as well. So when I approach my desk in the morning time, I'm looking for my key levels. So I'm looking for my support and resistance levels, my structure highs, my structure lows, so forth and so on. And I'm identifying my potential setups and my entries. So I'm looking to see like, okay, if price is in this structure form right here, like this, I know that if we break and come back to retest these lows, then I'm gonna continue selling. If price breaks above these highs and retest, then I'm gonna take a buy for the day. It's literally that simple. So you want to identify what's your potential setups and your entries and what they look like for that day. Like you should be able to, you should plan your trades for a buy scenario and also a sell scenario, because you want to be mindful of like, okay, the market can go in either direction, and it's your job as a trader to react to it. It's not your job as a trader to predict prices. Your job as a trader to react to it. So you want to be able to be pretty much prepared for any entry or any setup that the market has presented to you. And then you also want to set your risk levels for the day. So when you set your risk levels, literally this to save you. If you say I'm going into the day and I'm only risking 3%, you might be feeling anxious. You might have news for the day. You might have just got into it with your girlfriend or your boyfriend, whatever the case may be. You want to set your parameters ahead of time. That way you don't have the chance to go into tilt mode. So tilt mode is like you lose a trade and then you start to trade and trade and trade. And then over time, you don't even realize like you over trading. And next thing you know, like instead of you losing 3%, you done lost 12% or 15% or 20% on one particular trade setup because you just began to overtrade. So when you set those risk levels for the day, that gives you the opportunity to say, okay, I lost 3% today. Okay, cool, I'm done for the day. I'm closing the charts, so forth and so on. So you want to have those set up on a day in and day out basis to know what is overall risk, right? Now, one of my favorites, post-market routine. This is like like journaling at the end of the night. This is kind of reflecting on what today has brought. So, of course, you want to journal every single trade. You want to have your entry, your exits, your reasonings, the mistakes you may have made, and your emotions. Tracking your emotions is super key because you can become aware of, like, okay, am I anxious in this trade because I jumped into early? Am I fearful because I jumped into early? Am I fearful because I over leverage? You want to be able to track those things so you know and you can actually make those adjustments. The moment that you don't track anything, you can't really make the adjustments to see what's working and what's not, so forth and so on. And that goes hand in hand with analyze what worked and what didn't, and then also review your charts and adjust the strategy as needed. Right? So of course, if you had your take profit level at negative 61.8 and you were supposed to have it at negative 27, then you can adjust, like, okay, next time I'm going to potentially take my profits at negative 27. Or if you saw a huge engulfing candle at a level of support and you didn't close your trade, and then you like, all right, this time, like I said, I noticed it pulled all the way back and hit my stop loss when it got that engulfing candle at that level of support. So next time I'm gonna be mindful of that because that might be something that you add on to your exit strategy, so forth and so on. And then just overall having that mental reset for the next trading day. Like, y'all don't want to overwhelm yourselves because trading is literally mentally exhausting. So like, you got to give yourself a reset. And that's why the weekends, like, weekends are literally a breath of fresh air as a trader because it's like you get the weekend to reset, so forth and so on. And same thing at the end of the day. It's like, all right, you close the laptop, you get off the desktop, so forth and so on, and you're able to actually just reset and live, live freely, so forth and so on, right? Now, moving on to the psychology aspect and the discipline. You want to have goals for yourself, right? Goals are important. Why? Because goals give you something to strive towards and also, like, know why you're doing this in the first place. You don't want to just trade just to trade. Like, just trading just to be on the charts, you can literally become addicted to just like being a trader but never really make money. So you want to have goals for yourself. Your goal may be, say, okay, I might follow my rules regardless of my profit or loss. Like, that might be the goal for this today. Is literally building a good habit. Or the next goal may say, I'm only looking to take a trade if it checks off 1, 2, 3, 4, and 5. That might be the goal for the today. Now, I don't suggest that y'all just like make like, oh, I'm going to make $2,000 today, because like that may cause you to just force trade, so forth and so on. So you want to set goals that are actionable where it says like, okay, I want to make sure I check off all of these boxes. I want to make sure that I have a clean setup before I place this trade, so forth and so on. So those are the goals and the discipline that you want to have inside of the market when you're following or when you're actually creating your trading plan, right? And then a couple mindset reminders: follow your plan, not your emotions. Literally, as a trader, emotions are your worst enemy, right? So when you understand that your emotions are your worst enemy, you know that, okay, I just have to follow my plan and stay committed to what I said I was going to do long after the mood in which I said it in has left. That is the holy grail of trading, is staying committed to following your rules without your emotions, right? And understanding no revenge trade. Point blank period. You can't revenge trade. Revenge trade, like I said, is a stem from you not having a plan. Like, and you having your emotions involved. The moment that you have your emotions involved and you don't got a plan, boy, you in for a hell of a ride. Because that moment that you get emotional and you just take a trade and you lost it and you try to get back in, then like I said, that's the start of tilt mode, so forth and so on. And then, like we talked about on day one, stay disciplined. Discipline equals self-love, right? When you love yourself enough to stay disciplined, you can get anything that you want out of this life. But you gotta make sure that you love yourself enough. So do me a favor and do yourself a favor. Show love to yourself in these markets. Don't go and hurt yourself inside these markets, because these markets could literally tear you apart. But when you do what you're supposed to do, when you follow your plan, when you stay disciplined, trust me, that is a lot more fulfilling than making a quick buck. So definitely, like I said, understand that discipline equals self-love, right? Now, last and final thing, accountability and being able to approve. having those end of the day notes, so those post market routines, understanding what is your biggest takeaway from today. So whatever your aha moment is, or whatever you may have learned in the moment of you trading and you reflecting on your day, and then understand like what are your market conditions. Like right now, like I said, super volatile. Okay, that's something that you take note of and you can improve tomorrow. Like let's just say you used to having a 50-point stop loss on NAS, and then you realize, okay, based off of the volatility, the volume, I need to increase my lot size. So that's something that not increase my lot size, increase my stop loss size. And that's something that I can equate and go hand in hand and put that into my trading plan for tomorrow. So that's one thing for it to improve tomorrow. And then, of course, at the very end of the week, this is super, super important, reflecting on how the week went. Did you follow your plan every single day? Yes or no? What are your biggest strengths and weaknesses after this week? Did you close trades early? Did you analyze correctly, but your entries was shitty? Did you exit shitty? Did you exit a great job, or did you exit too early? Whatever the case may be. And what adjustments should you make going forward? The moment that you take the time to actually reflect on all of these things, this is the self-work that's going to get you to the next level. I promise you, I promise you, I promise you. Every single thing, like the patterns, the Fibonacci, the structure, all of that stuff is just a little bit of the puzzle. Like that's going to help you like recognize stuff inside of the charts, but the self-work, this trading plan, reviewing things on a day in and day out basis, taking these notes of yourself, tracking your performance, holding yourself accountable, and being disciplined, that's the stuff that gets you to the next level in trading. Not me teaching you structure and fibs. Like, why do you think I can teach you this stuff on YouTube for free? Like, that's not the hard part. That's literally the easy part. Like structure, fibs gonna be fibs, trend lines gonna be trend lines. Like all of that is always going to be there, right? The difference between having somebody that's a consistently profitable trader and a non-profitable trader is up here. It's the dome. So you doing that work, you doing that self-work, that's going to get you to the next level. That's the gap, right? We talked about bridging the gap. I think it was on day 7, day 8. Bridging that gap, doing this work. I promise you, I talked about back testing and getting your eyes familiar with the charts. That's important so you can recognize. But this stuff right here, this is the work that most people leave out inside of trading. This is the work most people don't want to do. Why? Because it's not as exciting as trading. It's not as, it's not that much of a rush. Like this is kind of like writing a paper in college. Like you don't really want to write. But this is the necessary things and the necessary requirements that trading consistently as a profitable trader requires. So with that being said, make sure that y'all actually taking the time out to actually formulate your trading plan. Of course, this is a template that you guys can use that I came up with for you guys, but you don't have to make it exactly like this. Like this is just a template, so it's just used as a guide. You can add whatever entry triggers, extra strategy, execution, stop loss strategy, whatever the case may be that works for you. This is just, like I said, a template, a guide, so that you can use and know what it is to kind of have a trading plan, so forth and so on, right? So that being said, I really appreciate everybody that stuck around for day 14. Tomorrow is day 15. Tomorrow is our last day of trading camp, and make sure you stick around. I got a lot of valuable things for you, and I have a surprise at the end of day 15 that you guys don't want to miss. So like I said, make sure y'all implement what we talked about today and everything else that we talked about in the boot camp, and I will see you all for day 15 tomorrow.